Hello, sorry, Elki. I think your voice is not clear. I can't hear anything.
Hello, hello, hello. Is it better right
Yes.
now?
Yep.
Yes, better now.
Okay. All right. Okay. Sorry for the interruptions. Okay. Good evening, everyone. This is Elki here with you guys today. Welcome to our section for tonight. Together we have Naren from Macquarie Warrens, the equity derivative sales, the product specialist. Okay. And also we have Martin with us today, the director from Trade VSA, and also the chief trainer and the respective coach from Trade VSA. So we are proudly to have two of them, the two gentlemen with us today, and share with us some of the key insights and also strategies to look into Bursa Malaysia amid all the happenings, all the uncertainties, all these global trends that happening right now. All right, okay. So let us start our section tonight. Okay, without further ado. Okay, so before I start the sections, okay, just a simple disclaimer. Okay, all the ideas that we are sharing here is solely the opinion of the speakers right over here. Okay, so in between the section, we might mention some stocks, some names, all this. Okay, they are for education purposes and also ideas to look into the markets, general information. Okay, so you shouldn't take it as a buy call. Yeah. All right. So if you want to perform any execution, you can always feel free to check with your dealer, your remisers, your investment advisor, or if you do not have one, you can always look for us, Berjaya Securities. All right. Okay, we are always here to serve you. Okay. So let me start the section with we are a month into 2026. Okay. Naren or Martin, how would you describe your 2026 for the past 1 month?
To start off with rather interesting. You have both the equity market undergoing volatility, and yet we see tech stocks still trying to climb, but apparently facing that. But at the same time, with the kind of volatility you're seeing, equity is still high. Then you have the so-called hedging. People used to hedge like gold. It's also very high. So it's a very conflicting idea. Usually you get one or the other. You don't get two that is doing very high. That's so far for 2026 for me.
Yeah,
Yep.
exactly. I think 2026 is a very special year whereby we see gold is breaking into historical high. Yet we have US indexes, we have our Malaysia indexes all climbing high as well. And the volatility, man, is like crazy. Like recently, for those who have been in the market, we can see that the gold and the silver, they can move more than 10% in a day. So for me, we just start off with a wild horse. It is in a very volatile manner. How about you, Naren? How would you describe your 2026 from your end?
I think same here, like Elki. I think 2026, it's been quite a yo-yo year so far, right? We have seen, a couple of stocks performing well, and from our position, we can see investors just either taking leverage positions across certain strong names, especially over the gold warrant, given the performance of gold so far for this year. And at the same time, we can see some investors, taking positions across bearish views, taking put warrant positions over foreign underlyings, which of course we can go through a bit later. But yeah, this is generally how we've seen 2026 so far.
Yep, I think everyone do agree that 2026 is a year that is like really uncertain. We see a lot of volatility. I bet the VIX index should be high right now. Okay, yeah. So we will go through some of this later. Okay, so that's also the reason why we are having our section today together with Martin, with Nareen. Hopefully, through our section today, we're able to share some of the views, some of the insights, some of the or even some opportunity that could be arising in this kind of volatile environment, whereby can help our audience, our clients, our investors to probably achieve a better positions in their investments. Okay, so some of the topics that we're gonna cover today, we're gonna start with looking into some of the global outlook, like what's happening globally, and also looking into the domestic issues, like some of the things that people have everyone has been talking about, the strength of the ringgit, and some of the structural themes that been going on, and of course some of the follow up on some of the 2025 issues. Okay, so basically that's some of the topics that we're going to coverage. So myself, I will initiate some of the topics, while Martin will share with us a little bit more of his insights, his views from the technical point of view, and Narin will be the man that gonna show us how we gonna maximize our returns throughout all these events. All right, okay. So hopefully this throughout these sections we able to get something fruitful. Okay, so first we start. Let me start with global monetary policy divergence that we are looking at it right now. Okay, so first thing first, what is monetary policy for those who are not finance savvy? Okay, so basically monetary policy itself, this it actually tell us the strategy actions that taken by central banks like US Federal Reserve, like Malaysia wise Bank Negara, okay, BOJ, Bank of Japan's. They are taking some of these actions to manage the nation's money supply in order to control inflations, and also affecting how the interest rate goes. Okay, and by doing so, hopefully it will able to mold and control how the economy stability, and also achieve the nation the growth, the GDP growth, the nation growth in the way that they want. Okay, yeah. So what happening right now globally is we are seeing a divergence whereby countries, this round is quite a huge discrepancies whereby after the COVID era, okay, the are countries which is quick recovery from the pandemic. Okay, meanwhile some they are still struggling. Okay, fighting with the inflations that actually happened during that period of time. That's why we are seeing different states of recovery and also priorities in each nations. Okay, yeah, and also in their economic objective. Okay, so what we are looking at right now, we can see that across the global, okay, we are seeing a number of countries, while a number of countries they are putting interest rate on hold, like Malaysia. We are not expecting too aggressive monetary stance or actions being taken by Bank Negara Malaysia this year. Okay, meanwhile, like eurozones, like UK, they have been hinted they are pretty much done with the rate cuts. They are looking into on hold. But on the other hand, we have United States. Our the President Trump has been keep on calling for another rate cut and another rate cuts, and China with the targeted subsidized rate cuts towards a certain layer. But on the other hand, another side we can see that Japan, instead of rate happening in United States, Japan and Australia, they are calling for a rate hike. Okay, so things are happening quite differently at different region of global. Okay, and with all this divergence happening, okay, it actually creates a different scenario and different the different rate differentials that a lot of all these global fund managers, all these sovereign funds, they are doing a new round of assets allocations and also rotations. Right? Okay, so that is the reason why we are seeing a higher volatility happening right now, which also like what Martin was sharing. Okay, at the earlier of the section, whereby it's the first time we are seeing the gold is soaring high. Meanwhile, the equities are also hitting the historical high as well. Mainly, this is due to all these assets reallocations and also portfolio readjustments that happening right now. Okay, based on all this expectation of the differential in the interest rates. Okay, yeah. So with all this asset adjustment, we are seeing a high volatility, and Malaysia, as part of emerging markets, we could benefit on capital inflow due to a weaker dollar or even a stronger local currency, a stronger ringgit. Okay, yeah. So with all this happening, we are seeing every single markets is actually performing quite differently, and it is our job, okay, for one who able to identify which country or which currency is gonna perform better, okay, then they will able to grasp the most out of all these incidents, all these volatilities. Okay, so if we look into the last year global index performance, okay, we can see that most of the major indexes they are going higher. Okay, but PT Malaysia lah, FBFLCI year-on-year change is just only 2.3%, but luckily it's still positive thanks to the last month rally in December. Okay, whereby we can see Maybanks, public banks, all the banks are shooting high on foreign funds buying. Okay, and institutional buying. Okay, but if we look into all major indexes like Dow Jones, like S&P, like Nikkei, like Hang Seng, okay, all most of them they are achieving at least 10% and above. So it's a very peculiar situation whereby regardless the nation is looking into rate cuts or a rate heights, all the equities they are performing better. Okay, whereby in a general theory, if we look into it, is for the country that are looking into hike their rates, usually it will put a cap on their equities performance. Okay, so what's happening right now in 2025, 2026? They are really one of its kind, is really peculiar, and I believe 10 years later it would be a really a case study whereby everyone will be trying to study what actually happening at during this period of time. Okay, and while we are being lucky to be inside to experience it. Okay, yeah. So Martin, do you mind? Could you share a little bit on your view on all these major stocks indexes? We can see all of them they are high,
Yeah,
but which one of them they are
sure.
still going high? We could see more sustained momentum.
Okay, I will bring up the chart. So let me just share the moderator. Can you just share my screen? All right. All right. Let's something about my company, and I think just one or two slides. We are basically a digital investment advisor. We are licensed by SC Securities Commission, and we are awarded on November 2023. So we are therefore our algorithm is so much sort of regulated by the Securities Commission. So that's, and we're also one of the first encouraging company that have been granted this DIA license. So that makes it a bit unique. All right, let's get down to what we have for you. Now, what you see in front of you is the from the trading view, which I just pulled out the chart. And I'm just looking at the live chart too, just next to me here. The US dollar versus the ringgit. So far, what we are seeing that the US dollar is continuing downtrend. That simply means we're going to have been stronger ringgit. Now, on the 23rd of January, where we have that big fall, we subsequently saw a lot of a change in the foreign policies, right? That's happening in US, and not only, I got a few complaints, people coming, hey, why is ringgit becoming so strong? I said this is not really a ringgit issue, but it is a USD issue. So USD against all basket of currency has broke down here. So right now we are at the base level here around 3.91, but a little bit of pullback that we are seeing in here. All right. So as you can see from the top where we were previously, all right, my mouse here, we were around 4.2, 4.115. The market did try to rally, in terms of US dollar getting stronger, but still get pulled down, right? So that basically tells you there is an underlying of the trend that points to a stronger ringgit that we see in here, right? Now, what we are seeing that the current base, which is at 3.92, I believe on technically that's not the end of it. Okay, so it's not reversal yet. No doubt we see the market pulling back right now about 3.95, right? We were likely to see even lower, below 3.9. Okay, so expected the USD weakened in the first quarter of 2026. Along the same line too, there are news the US aircraft carrier right in the Gulf, I think Middle East Gulf. So if there is a war with the oil, so we do not know the kind of volatility. So do expect that in the next few days, right? Should Donald Trump administration and the Navy start striking. Okay, so that's for the US dollar. In short, the ringgit will strengthen some more. Okay, next one we have the gold. Now I don't have a gold chart, so I'll just use the ETF as a proxy, right? Gold ETF. So you can see from here, we still have a very strong uptrend. So all the charts that we have in Trade BSA are actually has a green pentagon. Now you can't see that. That's a little small green pentagon in here. That's basically tell us the signal to enter. Okay, so right now you have a red signal. That is a exit signal. So all in short, if you just follow that traditional TA, there is still a strong uptrend, but temporarily, right, we did see a climatic move when gold hit 5,005 and then it pulled back to 5,000 now, trying to retest back to 5,000. So you see that these are the two charts, the two bar that try to push back up again. So in short, the biasness is still on the upside. Okay, we have not seen. I don't think gold and silver both are going to be coming down to below 5,000. So that is provide some sort of base support in here. So our take is usually when you see the green pentagon on the ETF GLD, that's also a good time to be buying into this stock if you're interested in this stock. Okay. All right. Next, okay. So I have the. Okay. Oh my goodness. Okay. So next I will talk about is the. I have. Where is my other charts? Let me just. Okay, I'll come back to you first. I'm going to pull up 3 other charts later on. Probably I'll continue on the next session. Okay. You can continue, Elki.
All right. Okay.
Can't hear
Thank you,
you, Elki.
Markets. Okay. Yep. I think everyone is really curious whether are we gonna have a continuous, a sustained strength in the ringgit, and given that what we are expecting that the dollar is expected to be further weakened. Okay, USD MRR is likely to continue to go lower.
All right.
Okay, but of course, it's dollar. Later, I'm gonna talk about share a little bit on the ringgit as well. Okay. Meanwhile, we have been talking about the direction, the view of the markets with the volatility. So this thing. Okay. So many if one who are interested, one okay, Martin, you want to share the chart for the
Yes.
Dow Jones, S&P. All All right. Okay.
Okay. Once the moderator shared, now right in front of me, by the time you get the screen, will be the Macquarie warrant. Okay. In the Macquarie warrant heat map, we have these charts. These are end of day charts. So they are interactive charts. So first of all, let's look at the KLCI since we want to see that. So if you notice from the KLCI, all of them has the green pentagon. So what you can see right now, for the KLCI, the trend is still up, very strong. The little pullback that we see on the right-hand side, that is very minor. I do think that going the next couple of weeks, we will see higher trend. That is where you see this green pentagon. So we move on to next. Is the going to Dow Jones. Now, Dow Jones, you can see from here, let me just pull this up a bit. So, of course, the audience can also look into this. I think later on, I'll just share with you the URL, how to get into the Macquarie. Now, from the Dow Jones, you are seeing red pentagon. That means the momentum has temporarily paused, right? You can see it's a sideways movement that we see around here, just short of the 49,000 in here. So generally, we say that if you want to have a nice up move, just wait for the green pentagon in here. But we are seeing news events that is coming out that is really against the market. Even last night, I expect Dow Jones to break, but no longer that. So that's what's happening. So Dow Jones, then sorry, that was Dow Jones. Let's go over to S&P 500. Now S&P 500, you have this very classic a two-bar reversal. Market was trying to go up, then reverse back on this part here. And you could also see the 7K, the 7,000 mark. That is the main resistance in here. So it's just going to hover them. As I said earlier on, it's very interesting to see, despite the volatility we see in the market, we should see pullback in equity like the S&P 500 and the Dow Jones, but we are not, right? So for our Macquarie members and some of you who follow price and volume or volume spread analysis, we really suggest them to follow the green pentagon. That's where the up signal is coming to. Okay, perhaps later in the Q&A, some of you may want to know how does this, green pentagon work. We'll get into those details later on. So in this chart, we also have the other one we want to talk about is maybe everyone's favorite is Hang Seng. Okay, so you can see from Hang Seng, right? Trend is certainly going up from here up to about 27,000, but we have that red pentagon again. The kind of volatility push it down. Certainly, right, temporarily, the market has turned slight bearish. Okay, so generally we see that if you have a good trend like what we saw previously back in December, trend will continue from the green pentagon going on. But right now with the red pentagon, the uptrend has halted, looking at the sideways market, but may tip over to the bullish side. So right now I'm neutral, both from the Hang Seng side, but KLCI is still bullish despite being the green pentagon. Okay, that's it. Okay, I'll pass.
Okay, thank you, Martin.
Sure.
Thank you, Martin. Okay, I think for some of traders or investors who are not trying want to have a view of the markets besides of individual stocks, actually the indexes like FBM KLCI is the basket of the 30 blue chip stocks for Bursa Malaysia. Okay, it's actually like a benchmark of the financial markets for the country itself. Okay, yeah. So instead of cherry pick the stocks itself, indexes could be an instrument to trade amid this kind current volatile periods whereby we are seeing active swings up and down. Okay, and if you do not know how you can trade your view on all these stock indexes, in markets they are products like, so of course you can do it through stock equities whereby you can buy all the 30 blue chip stocks, okay, and with the correct weightage, okay, but you also can do it through ETF, through futures, or you can do it through structured warrants that Naren gonna share with us how we can do it. Okay, yeah. So for some of you guys who are not familiar with structured warrants, okay, Naren, can you share with us, share with most of our audience right here, what is actually structured warrants and how we can? There are so many structured warrants listed in Bursa Malaysia actually, and how can we choose the correct one, the right one?
Thanks for your question, LK. Could I have my slides propped up? Hi, everyone. Thanks for taking time to join us this evening. I'm Narain from the Equity Derivative Sales Team at Macquarie Warrants Malaysia, and I'll be your guide today in the structured warrants walkthrough. Just the next slide. Before we go through the overview of what structured warrants are, a couple of quick disclaimers before I begin. Please do not upload or post the material I'm showing you today, as this presentation has not been reviewed by the Securities Commissions Malaysia. Next slide. Yep. Right. Investment products, including warrants, are subject to risk with potential loss of capital, and you should always seek advice regarding the suitability of any investment product before you invest in it. Yep. So can we just go on to the first section? Skip the next two slides, please. Next. Right. Okay. Right here. So now let's have an overview of warrants. And for those who are not too familiar, this will be a good learning opportunity. And for those who are, do treat this as a quick refresher. Yeah, this slide will do. So what are warrants? So structured warrants is a derivative product that is listed and traded on Bursa Malaysia. Derivative meaning it derives its value from the respective underlying that it tracks. So what underlyings do structured warrants track? It can track single stocks, indexes, both local and foreign, ETFs, among others. Now, generally speaking, structured warrants are often used as a leveraging tool. And in the case of warrants, there is no margin call, meaning an investor cannot lose more than their initial investment. But what's the purpose of structured warrants? Why structured warrants? Can we go to the next slide, please? Is it okay? Slide's not moving. All right. Okay. So why structured warrants? So as briefly mentioned, structured warrants are often used as a leveraging tool. And this is because of the existence of gearing, which enables the warrant to move in greater percentages than the underlying they track. It's because of the gearing, in fact, when the underlying stock moves 1%, your warrant might move, let's say, 3 to 4%, right? So with warrants, investors can also gain the same investment exposure with a lesser amount of capital involved, as generally warrants cost a fraction of the underlying, as many warrants are priced at 10 cents or even lower, which leaves investors with their excess capital to diversify their investment portfolio. Investors will also be able to trade overseas markets without leaving Bursa Malaysia, and at the same time take advantage of either a bullish or bearish market. Now, you might have heard the term shorting the market. Well, anyway, you can stick to this slide. You might have heard the term shorting the market. Well, with structured warrants, you're able to do just that via put warrants, which I'll go through with you shortly. But of course, it's very important to know the risks involved before entering any investment. And in the case of warrants, you are subject to market risk, where market movements might adversely affect the price of the underlying and by arm's length your warrant price. Foreign exchange risk, where the warrant price will be affected by the fluctuation of the relevant currency. Gearing, which can be a double-edged sword, as the leveraging can amplify your gains, but also your losses should your trading view be incorrect. Now, in that case, I guess you can view gearing as either your best friend or your worst enemy. And finally, warrants have limited life and can't be traded after the expiry date, making them not suitable for a very long-term investment tenure. Next. So now we are going to look at how warrants are named and how can you identify a particular warrant. Now, the first part would be the underlying, which is generally abbreviated from the full name of the stock. So in this example, I'm taking 99 SMART, which is abbreviated from 99 Speedmart Retail Holdings Berhad. And then the second part would be the C. Now, the C would indicate that it is a call warrant. And if you see H there, means it would generally be a put warrant. But we'll go through that in the next slide. And the last part of the whole sequence, which is 20, would be the series attributed to the warrant. Now, do take note, call warrants move similar to the underlying they track, traded to express a bullish view. So if you believe the underlying is going up, then you should be looking at call warrants. And of course, this slide will show you what is a put warrant. So in this case, I'm highlighting the underlying, which is a Hong Kong stock, Formely International Group Limited. and the H will symbolize the put warrant. And put warrant sometimes can also appear as PW instead of H. And lastly, the series, which would be number 1. So put warrants work opposite to call warrants, meaning they move in the opposite direction the underlying they track. So if the underlying starts to plummet, all else equal, your put warrant will go up in value. Next slide, please. Now, I don't have much time to run through all the warrant basics today, so I will advise all investors considering warrants to thoroughly educate yourself before trading any instruments. Next. Do check out our website to learn more. Do check out our website to learn more. Our Investor Academy is very, very thorough. That's initially how I learned all about warrants myself, as well as we have several other tools to help you on your warrant trading journey. Next slide. At the same time, if you feel you want that personal touch, do reach out to us. Our number is here together with our email address. Drop us a call or drop us an email, or at the same time, we provide a lot of educational articles via our newsletter and social media platforms. So do scan the code and reach out. Hopefully, we are able to teach you something, and we'll be looking very forward to hearing from you. Next slide. So finally, next slide. Finally, now that I've covered my basis on the warrant interview, getting to your question, Elki, how can an investor trade their relevant views on foreign indexes via structured warrants? So in general, Macquarie does provide, next slide. In general, Macquarie does provide both call and put warrants over the foreign indexes mentioned earlier and more. So reiterating just one more time for you, call warrants are for a bullish view. They move in the same direction as the underlying, whereas put warrants would be for a bearish view, where an investor can potentially gain as the underlying falls in price. Remember, for those who are unfamiliar. Next slide. So in my following slide, here's the list of all the indexes for which Macquarie Warrants Malaysia has warrant offerings. As you can see, this is a broad range of selection, covering from the Hang Seng Index and the Hang Seng Tech Index of the Hong Kong markets, the US markets, the S&P 500 Index, and the NASDAQ 100 Index, as well as the Japanese markets of the Nikkei 225. At the same time, we also have warrants over ETFs, the A50 China ETF, as well as the ASPDR Gold Trust ETF, which tracks the movements of the gold bullion, which we've heard quite a bit in this webinar so far. So in this case, should you share your views with Martin earlier? And, should you believe that there is a strong uptrend for the Nikkei 225, for example, in the medium term, and that uptrend is intact, and you believe the Japanese market is going to appreciate, then you can consider a call warrant over the Nikkei 225. So if you recall back my previous slide, you're basically looking for a call warrant, which basically starts with Nikkei, and you're looking for the word C, and then you're going to run through the relevant terms to decide whether or not it is the suitable warrant for you. Same thing applies for the S&P 500 warrant, where you can pick up an S&P 500 call warrant to capture the bullish uptrend, or if all else fails and you believe in your own view that the technical indicators are turning bearish, where rallies are meeting supply pressure, so on and so forth, and the market is going down, then you can look to the put warrants, which starts with a H or PW. And for example, you can look to the put warrants over the Hang Seng Index, for example, over the Nikkei, over the NASDAQ, where you will potentially benefit if the underlying drops in price. Do select the warrants based on the right gearing level for you, based on your own risk tolerance. And I hope that overview and run through was good enough for now. And back to you, Elki. Can't hear you again, Elki.
Forgot to unmute. All right. Okay. Yeah. Thank you. Thank you very much, Nareen. Okay. So one thing that I really liked, like what Nareen has been sharing is, without needing me to go into another platform, another broker. Okay. Just on Bursa Malaysia itself, I can actually hedge my positions by just using the put structure put warrants using structure warrants. Okay, especially at current this kind of high uncertainty environment, whereby we are seeing stocks reaching high, and we are seeing in just we just like for example last Friday we see the Trump nominates a totally unexpected candidates for the Fed's chairman. We have the market slumping, we had gold dropping, and on Monday we had Kospi drop more than 5%, and also IDX Indonesia Exchange has been selling off. So who knows what gonna happen? Okay, yeah. So put warrants for me, put warrants with the correct knowledge, with the correct idea, it actually gives us a platform for us to put in some to hedge our positions. Definitely in this kind of high uncertainties and environment, we don't want to be restricted to only do one direction. Okay, which is usually for stocks we can only buy, we can only long. Okay, and this is where structure warrants it come in, whereby it can help us to hedge through possibly through the stocks put warrants, or even hedge through the index warrants. Okay, yeah. So throughout the sharing
Yep,
of the idea why
absolutely
we
right.
are having all this volatility, all these uncertainties happening is mainly due to the asset reallocations, all these changes in the global monetary policy that's leading to all these uncertainties that we are seeing right now. Okay, yeah, but um, in as a byproduct of it, we also seeing that our local currency ringgit is actually trading at its highest level since 2018. Okay, I do agree with what Martin said. In a midterm, we personally I also expect that we should see ringgit to further strengthen, in view that in the anticipation of U.S. Federal Reserve gonna continue to cut rates. Okay, especially with after Powell retirements, we might have a new chairman coming in who could be a little bit more aggressive than Powell. Okay, yeah, and that could make our ringgit bond more attractive, and hence seeing a stronger ringgit moving on. Okay, but not only just influence from the dollar side, but it also thanks to we are seeing a greater political stability, a clearer transparency in our financial system, and also all this more positive fiscal balances, whereby we can see more targeted subsidies that happening, that our current governments they have been executing. All this thing add up itself, it actually contributed to why we are having a stronger ringgit right now, whereby many people they have been asking, hey, what, we don't feel anything changed, but why ringgit has been stronger since 8 years ago. Okay, we achieved the strongest, the highest level. So all these are the things that add up, and eventually we are where we are right now. Okay, yeah. So if we compare to some of our peers, okay, we can see we actually are really our ringgit is actually really performing really well. Okay, it is appreciating and also strengthening comparing to all these currencies like dollars, like yen, like CNY, like Sing dollar to or Thai baht. Okay, and as a result of a stronger ringgit, okay, we actually can enjoy quite a number of enjoy quite our businesses, we ourselves, we also enjoy some of these aspects, such as for us as retailers, as spenders, we are enjoying a reduced inflation pressure, whereby we are seeing all these imported foods, all these consumer goods, they are actually lower prices. Okay, Okay, yeah, and also it helped us. It support the domestic consumption sector with a stronger ringgit. Okay, yeah. So other than that, we for businesses wise, we are seeing for those businesses that have been importing. Okay, those importers. Okay, they are enjoying a cheaper imports for their raw materials, for the machineries that they have to purchase, and also enjoying a higher, able to produce a higher gross margin from that. Okay, so these are some of the beneficiaries from what we are having right now, a stronger ringgit. Okay, for banks, for some companies with US denominated borrowings, they are also enjoying and able to put out a healthier and also improved balance sheets with a lower repayment burdens or even with a better financial standing. Okay, and just because we have a stronger ringgit. Okay, yeah. So now we already know that these are some of the beneficiaries. These are some of the companies, businesses that are enjoying the who are enjoying from a stronger ringgit. It actually uh, from traders investor perspective, we actually able to look into it and set up our trading plan from there. Okay, just for a very simple example. Okay, in February we're gonna have usually February is a results pack month. Okay, we have a lot of quarter results coming out, all this. Okay, so if we look at based on the ringgit chart that Martin shared, we actually started to see the ringgit strengthening since October last year. Okay, has been strengthened gradually, and then we have a sharp move in January. Okay, but starting October last year, we are seeing that the ringgit has been strengthening gradually. Okay, so that should reflect that should impact and also reflect in the coming quarterly result that gonna due this month. Okay, so knowing that all these sectors that benefited from a stronger ringgit, okay, are we able to position earlier, knowing that their results could be better? They could be enjoying from forex gains, they could be enjoying from higher gross margins, they could be enjoying from a better sales. Okay, yeah. So these are some of the things that we can think and be prepared as we are entering the second month of 2026. All right. Okay. And of course, there are sectors who are benefiting from it, but also there are sectors who actually suffering from a stronger ringgit, which is export oriental. Okay, they face a higher competitiveness. They also and suffering from foreign losses. Okay, as the ringgit got stronger. Okay, so not only just trying to see which are the sectors to be in, but we also want to avoid some of these sectors that could be affected by the stronger ringgit. Okay. Meanwhile, while we said we want to avoid export-oriented sectors like technology, like glove, okay, which we can see they have been underperforming. Okay. Another reason that what we are seeing is all these issues that we seen and have been discussed in the year 2025. Although we are in 2026 right now, all these issues they actually remain unsettled. Okay, it doesn't mean that once we move from 2025 to 2026, all the issues all settled. Although we have some agreements, quite a number of countries they have agreement with the US, what kind of tariff they're gonna put on. Okay, but if we look into a global picture, in a bigger picture, a lot of all these uncertainties they still remains. Tariff uncertainties it remain on the cards. Hence, for export-oriented sectors, they always have this tariff uncertainties behind their back when all these fund managers they are investing, they are putting their money in. Okay, so as a retail traders wise, these are the sectors that if the market is good, they might move higher, but not as high as others. Okay, but when the market is bad, these are the sectors that gonna impacted the most. Okay, so hence risk and reward wise, we might really don't want to touch on some of these export oriented counters at the moment. Okay, yeah, all right. So in the year 2026, we really want to be picky as not only tariff uncertainties is still on the table, but we are also seeing a rising geopolitical issues, like between China, Taiwan, and also some of the tense movement conversation between China, Japan, still ongoing war between Russia, Ukraine, and also recently with Israel, Iran. Okay, so all this tense relationship, and also they are triggering deglobalizations trends that is starting to surfacing. Okay, for the past 10 years, we have been looking into globalization, but right now things are reversing, and we are seeing a total new directions. Okay, yeah. So these are some of the reasons that also supported the high volatilities that happening that we are seeing in the global markets and also Malaysia markets right now. Okay, yeah. So maybe some of you guys will be asking, hey, LP, you talk so much, so we cannot trade lah. We better don't do anything, just keep the money or just convert everything into gold. It's better, it's safer, right? Okay. So you can see why the gold price has been shooting high because they are part of people, a portion of people, they really don't want to go into all these higher risk equities markets, but they would want to put into like safe haven, like gold, like possibly some safe haven currencies like Swiss franc, all this. Okay. But for us local, for those who would still interested to look into equities markets, okay, actually our local domestic structural team, some of these thematics, some of these sectors, they are actually outperforming. Okay, while we are not focusing on export oriented sectors, okay, some of these other sectors that are still shining, and also they are providing us some opportunities to look into for the year 2026. Okay, so for the year 2026, we are expecting to see a continued expansion of data centers. Okay, meanwhile, we should expect a sustained infrastructure spending under budget 2026, and this will contribute to construction sector that we are looking at it. Okay. Meanwhile, we also have renewable energy transition that is going on. That our current government, they are pushing it very hardly and very strongly, and we should see more revenue going in as things are unfolding. Okay. And of course, this year is the Visit Malaysia 2026 year, and we are seeing some of the sectors like consumer, like aviations, like REITs, they will be outshining. Okay, yeah. So just cover a bit on two opportunity right here. One would be the first one, like I said, I was sharing on constructions. Okay, whereby after the underperforming in major constructions counter in the last quarter 2025. Okay, many of them, they actually have come to an attractive valuation at this moment, and especially some of these earnings that's from the contracts they win in 2025 will be materialized this year. Okay. Meanwhile, on the other hand, the AI related investment data center, it will still keep going, and this would keep the steady pipeline for all these construction projects. Okay, yeah. So construction is definitely one of the sectors that we want to keep monitoring and keep looking into it. Meanwhile, consumer, it will be another major sectors that I believe will be the key sectors to look at for the year 2026, whereby just in February this month, we are expecting a second tranche of the payment under SARA to be disbursed. Okay, and if we look into what happens in last year, okay, you can see for the first tranche of SARA, it came out. We can see there is totally a spike in the retail sales growth. Okay, yeah. So similarly, when we are having it in February this month, okay, we should expect a similar behavior happens, and should be see such a spike, and that would definitely help the retail business like Speed 99, like Eco Shop, like Mr. DIY, or Nestle, Dutch Lady, etc. Okay, and of course, amid Visit Malaysia year 2026, we would be expecting a potential tourism upcycle, and that would be great for like more rates, hotels occupancies. Okay, yeah. So for those who are a little bit, for those who dividend seekers investors, you might want to look into some of all these more rates like IGB rates, like Pavilion rates. Okay, with the year Visit Malaysia 2026, we might see some of these rates to outperform. Okay, compared to other like office streets or this. All right. Okay. Yeah. So so these are the two sectors that I think could be really crucial and really need to be monitored, and we really want to take some of the counters that, arising from these sectors to trade on for the year 2026. Martin, uh, what do you think? Does the system shows some similar results? Are some of these key stocks in these sectors they are performing? They are suggesting any upsides for all these counters?
Yes, I do agree with many what LK was saying, and it's already shown up. Now, of course, last year, many of the audience would know the one of the two best sector performance was plantation and also REITs. So that momentum may have changed this year. We are seeing a bit of finance through the pickup of the market recovery, but the REITs still remain, and also the consumer sector. Now, if I can share my slide, I'm going to show you some of the more promising charts that are looking bullish, and I'll try to explain them from a technical standpoint of that. And of course, I will start off with the Macquarie warrant heat map that you see here as a source to look out for trading idea, especially those of you who are looking into having a leverage structured warrant. You can go to malaysianwarrant.com. Now, if you look from the chart, I'd like to start off is, just now we were talking about construction data center. So Gamunda. Now, first thing you might say, hey, Gamunda will look so much promising. Why is the chart going down? Right, I came across an article just today. They talk about the S curve. And I think partly this is due to profit taking, buy on rumor, sell on fact. From a technical standpoint, that seems to be more valid. But also the current IJM been bought out by Sunway, which will compete with Gamuda, and that's why we're seeing that. So from the breakdown point at 4 ringgit 80, you see from the chart here, right? That's where the market started to break. That also coincides with the red pentagon, the trends going down. Evidently, distribution. Distribution, just people started to sell as they go down. All right. So we did see that over at the top, and then the chart sort of mushrooming down, and that's usually where the trend continues. Now, breaking below the 470 on high volume, and right now the biases is still at 4 ringgit 20. We might see a bit lower down because we're seeing volume. Now, if you're thinking to go long to buy on this stock, you still need to wait for GP. GP stands for Green Pentagon, right? You can use the Gamuda chart from there. Now, next on the same theme as construction, you'll see Suncon started to turn Green Pentagon. All right, Suncon trend is still uptrend. The structure is still intact. You can see higher high, higher low. That simply means as the trend goes up, you can see all the low here, right? This is one low, this is another low. It's higher than this low. So technically, that's a very nice uptrend. Now, with the Green Pentagon, that's very promising. I haven't checked what was Suncon, remember these are end of day charts, so they only update at end of the day. So today you probably have to look into them. But I do think that quite promising Suncon. The recent pullback that we see here, right, that denotes they will control supply, I mean the sales of those stocks. So that means, and then you have this nice breakout in here. Biases remain to be bullish, right, on the continuation of an uptrend based on the current GP. GP stand for Green Pentagon. Okay. Next is Sunway. Similar to, like I said, Sunway is doing well. Suncon is also part of the Sunway, and that's why Gamuda is going down. So you do see a competitor. All right. Here you can see Sunway did range bound, but finally broke through the 5 ringgit 70 right here, and it's tested. That means the sale at the 570 are low. Means there are not much sellers at 570. That being the support previously was a resistance. They broke through it and now coming back. So right now, if you see a continuing, we have to wait for a new upside, mean market breaking to a new 3-month high. That would be slightly above 5 ringgit 80. Range bound, but if you want a continued trend, wait for that confirmation of a break. Still trend is up. Now we're going to move down to the so-called visit Malaysia year and all those retail stock, when all the government servant as well as people getting that extra money spending from the Madani government. So a lot of this FFB stand for Farm Fresh, right? And they've been heavily advertising on road sign. You can see that lots of good thing. Have you tried their ice cream, FFB? They're not too bad though, right? So FFB with the daily product, milks and cheese, right? So we can see it's been range bound for some time after breaking above, just in the late November, right, with a green pentagon and holding above 2 ringgit 80 cents. So usually when we see this kind of range bound around the 2 ringgit 80 cents and going higher, that means accumulation in here. Well supported, no breakout yet. Okay, still green pentagon. Right now, as you can see, market couldn't go up. So the trend is still neutral until the range that we see between the 2 ringgit 80 cents and the 3 ringgit sorted out in here. So still sideways. Next is the 99 Speed Monk that everybody know, used to be the brand name, what, cheaper than others, something like that, right? So that has done pretty well. 1st of November, and the charts that you see in the Macquarie heat map are dated about 6 months. So that trend has continued to go up until we hit 4 ringgit in the mid-January, around 18th of January. You could see here that was a red pentagon, and that trend seems to be so-called pause that trend. Okay, but having said that, there is no green pentagon yet. Market did try to retest back the 4 ringgit resistance, couldn't go higher, also pull back in here. So that means there are some supply coming up. There's some people willing to sell or taking profit at $4. I'm sure. So those of you who have bought it at $3 and you can see the market range at the resistance level just before, want to take some. Okay. Now the chart that we see here, uptrend is still intact unless the support break that 375 support level, which is this level in here. Because right now you can see this is a test, which is a sign of strength, but then the next bar was a down bar, taken out that support in here. So that did not, and also take note, this bar here is strong in the volume. So every time when you see stronger volume, right, and the break, especially at the top, that means more sign of strength coming and more profit taking for 99 Speed Mark. Next, we have Aeon. All right, now Aeon was very typical. Look, this is again going back to early December. There was a big climatic selling right at 1 ringgit 20, going to 105, $1 in here, and then it just paused, right? And then the green pentagon came in, so that completes the accumulation. Right at the bottom here, you could see at this level, lots of volume, right? So a lot of smart money, they were collecting it here, and then started to move up on very light volume. You can see light volume here. Still green pentagon denote the buy signal going up, and then finally volume came in just beginning of January, right? Of course, that is also confirmed by the foreign fund flows that we see very heavily by MIDF and also some of the local charts. And then market broke through 1 ringgit 15, and the rest is sort of in the uptrend. So uptrend. That was good. There was a lot of so-called what we call profit taking in here, but then smart money decided to also pick up some of these stocks. Okay, this pullback that we see here, the 1 to 110 trend is still up, definitely. Next, we have the CIB, right, which is banking. The uptrend continued, right? Uptrend is still intact in here. Again, going back to the lower lows, all right? The higher lows, you can see this higher low, this higher low, and this higher low, right, are respected, meaning this guy over here is higher than this guy and over this guy. So that means that usually the trends continue in here, okay? And there's no distribution bar, what we see from here. No doubt volume is coming in, that which is a good thing. And of course, CIMB is also a proxy to our KLCI, FBN KLCI, which is similar to Maybank and all public bank, which about 30% weightage on our FBM. So if the KLCI were to break to around what 1760, okay, 1780, then you will see CIB tested back at $9. Nestle, all right, Nestle uptrend still intact, but we do have profit taking in here. There were some what we call sign of weakness, like uptrust sell-off in here, right? That denotes temporarily. Right now, the weakness is coming in here. It's been an uptrend for some time in here, right? So the supply at 120, which is the top here, they couldn't break it, and that's why Red Pentagon came in. Right now, the bias is still neutral, meaning market will just move sideways, right? If you want to get in on Nestle, wait for the green Pentagon in here, right? Then we talk about the REITs, which is all the so-called Visit Malaysia exposure to malls, Pavilion REITs, IGB REITs, and Sunway REITs. So definitely looking at Pavilion REITs in here. Back to last year, remember I talked about one of the best sectors was REITs. So I think it did about this whole sector about 6 to 7% return for 2025. And as such, towards going to the end of December, there were a lot of profit taking markets sort of merged back. And then, hey, come January, right, they realized that profit taking has paused. That's why I agreed with Elki saying a lot of opportunity on REITs, and especially those of you who want a bit of play on the market and have some dividend yield, I suppose from that, this will be good. Trend still up for Pavilion REITs. Next, we have IGB REITs. Okay, now IGB REITs again, going back to December, there was a huge shakeout, market drop, but volumes are a bit low. And then come January, foreign fund again, so I think they're responsible. They pick up a lot and push the stock higher in here, way back to 360. And then right now, of course, once they hit a new high, you get resistance coming in here. The bias is still bullish, all right, unless it break back to 3 ringgit 30 in here. Okay, Sunway REITs, again, one of the strongest of the so-called branded REITs, continuing uptrend, very nice. You can see from the green Pentagon back in 1st of December. So if you are bullish into some of these REITs, you can perhaps look into those in here. Okay, so there are more trade ideas in the Macquarie warrant heat map. So I'll just stop over here, but you can check out the green Pentagon screener, as well as the next one is the weekly screener in the Macquarie. All right, I'll pass the floor back to you, Elki.
Martins. Okay. Yeah, I think we have seen quite a number of counters, especially those consumers. Some of those REITs, they are hosting a very strong and healthy uptrend. Okay, yeah. Narrate. Okay, so right. We have talked about indexes warrants. Okay, we have talked about indexes warrants. So generally, how traders or investor, they actually utilize the stocks warrants. Is there any difference between trading stock warrants and also index warrants, or is there any specific strategy that you would like to share with us, how one can actually enhance their profitability while they are trading stocks, but also they can use the stock warrants to achieve maximize their results?
Right, great question, Elki. Now, of course, the strategy in how an investor can go about in local stock investing or investing in warrants would differ, also depending on what would be the investor's main goal here, right? So, I guess what I can do here is I can just talk about what investors can do to amplify potential profitability, right? As well as run through some of the trending warrants that Macquarie has over the underlyings and sectors that we mentioned earlier, as well as the tools that they can employ in their warrant trading provided by Macquarie to help assist in their decision making to possibly enhance profits. Now, can we go to the next slide, please? And the slide after this. Right. One more. Right. So earlier, I believe, Elki, you were talking about foreign fund inflows and the uptrend of overall banking a bullish outlook on the bank. So where Martin has mentioned that the demand up bars for CMB are currently outweighing the supply on pullbacks. So here, right here on this slide, I have a real life example of our CMB call warrant, CMB C2H, and its performance this year all the way up until 27 January last Tuesday, along with CMB shares. Now, up until said date, if you can see based on the slide, CMB shares has appreciated by 8.5%, well in line with whatever we've been talking about so far in this webinar. Whereas the CMB call warrant, C2H, has appreciated by a whopping 38.3%. 29th January. Now, while this is a positive scenario, do take note of what I said earlier. Should CMB shares have declined by the same amount, it is likely the warrant would have depreciated in a similar fashion. Now, can we go to the next slide? So the question is, what would have happened if an investor traded the uptrend in CMB from 31st December? So here's the chart that I've pulled directly from a Bloomberg showing you the performance graph of CMB shares and the graph of the relevant warrant. All right. Now, as you can see, the warrant on the right-hand side, CMB C2H, moves in a similar fashion to CMB shares. It dips when the underlying dips, and it appreciates when the underlying ticks up, especially as you can see in the last week and a half of January, right? So the difference here, as you can see, is that our call warrant CMB C2H captured 4.5 times the gain an investor would have captured if he or she would have invested in the shares directly, right? So this is just a brief overview of how potential profits can be enhanced. Now, can we just
Yeah, I think Naren
increase
has.
in domestic demand?
Oh,
Hi, sorry, I'm back. Can you hear me now?
yep.
Okay, so, sorry. Small technical difficulty. Now, okay, as highlighted earlier, increase in domestic local demand along with Visit Malaysia year. So now we're looking at the consumer sector as well as the consumer stocks, right? And where investors can look at warrants over consumer shares, such as 99 Speedmart, right? As Martin highlighted earlier. So here we have our trending 99 Speedmart call warrant, C20, which expires in May and has an effective gearing of 5.5 times, meaning the warrant with an effective gearing of 5.5 times means the warrant tends to move 5 to 6% for every 1% move in the in 99 Speedmart shares. So the warrants in these slides is shown on Macquarie's Live Matrix tool. Now, it is very, very important for investors who trade our warrants to look at the Live Matrix tool before you begin trading, as it shows you where the warrant price would be at the given level of the underlying. So you'll be able to usually see up to 9 Live Matrix, 9 warrants all at once on the Live Matrix. And then you can also compare the 99 Speedmart warrants with one another and see which one fits you best. Additionally, you'll be able to see if the warrant is on tight bid and ask spreads, which is also important when you're considering warrants, and in this case, 99 Speedmart warrants. So as you can see, both warrants listed here are listed below 1 ringgit. So thus the spread between the bid and offer should be 1 tick, which is about half a cent, if it is on tight spreads, which in turn would translate to lower costs for the investor. So it's visible in this scenario as you compare between both of them and they are deciding which one you want to go for. C20 is on a tight spread of half a cent, whereas C19 is on a wide spread of 3 ticks or 1.5 cents. So if you were to buy 99 Speedmart C20 at the offer price of 12.5 cents, the underlying would have to move to 4.05 from the current 4.02 level, which you can see by the underlying bid on the blue line on the left-hand side of the graph, right? Just to achieve a break-even position. Now, on the other side of it, if you're to take position in 99 Speedmart C19 or 99 Smart C19 at the offer price of 29.5 cents, you will need the underlying to move up to 4.06 instead of 4.05 to achieve the same break-even position, right? So this is one of the examples of how you can use the Live Matrix to compare between warrants, to check whether they're on tight spreads, to understand your overall costs. Now, I'm sure there might be a couple of questions here, but let's just move on and I will run through further applications of how to use our Live Matrix so that hopefully you can understand it a little bit better. So can we get to the next slide? Right, okay, perfect. So in this slide, you can see how to also use the Live Matrix to map out your trading plan, right? Which is extremely vital when you want to look at warrants to enhance potential profits. So say you would like to buy a warrant to gain leverage exposure in Mr. DIY, right? Which is another consumer share highlighted earlier. So you can look at our call warrant, which is Mr. DIY C53. So what you would generally need to do is first determine the entry and exit level of the underlying, right? So let's assume in the case of Mr. DIY. Now understand the chart might be a little bit small, so bear with me as I run through with you just how we can work out our trading plan. So let's assume you wish to enter Mr. DIY, the stock, right, at the price of 184, and you believe Mr. DIY will appreciate to 190, and that is the price that you plan to exit. So using the Live Matrix, you can then see if you were to buy into the warrant at the price, at the underlying price of 184, the warrant offer price would be 4.5 cents. So that would be your buy-in price. And should you want to exit at 190, and should Mr. DIY hit that target price, and if you want to sell, which is selling at the warrant bid price, you would sell it at 5 cents, right? So in this case, it shows a very clear example. If you were to go for the warrant for the exact same underlying movement instead of the underlying, your potential gains would be 11.1% as the warrant moves from 4.5 cents to 5 cents. Whereas if you were to invest directly in the underlying, your gains would be 3.3% as the stock goes, as Mr. DIY's shares go from 184 to 190. So this is one example of how you can map out your trading plan. Next slide, please. Now, vice versa, you can also use the life matrix inversely to control your risk and limit your loss exposure should your view be correct. And that is something we advise all investors to do. So I'm going back to the same scenario here of Mr. DIY same C53, where you're strongly advised in all your warrant investments to set a stop loss. Okay, so same scenario, you buy Mr. DIY C53 at 4.5 cents. Okay, now your target price is 1 ringgit 90 cent. That's where you believe Mr. DIY shares will go. But of course, not all the time can we get our trading view correct. Sometimes there might be some news that might affect the movements of the stock. And unfortunately, what will happen is as the stock goes down, so will your warrant price. So you're going to need to set a stop loss here. So in this case, based on the buy-in price of 4.5 cents, you'd like to set a stop loss at 3.5 cents. So you can see it's at the highlighted at the bottom of the chart with sell. So based on the live matrix, you are still able to sell Mr. DIY C53 at 3.5 cents when the underlying bid is 178. So basically you will know if the stock drops to 178, that is when I need to sell my warrant, because then this will be the final price before the warrant's price will flip down even further, and my loss will be beyond what I'm willing to bear, and I'm investing beyond my risk tolerance, right? So here's another way we can use the life matrix slide. So can we go to the next slide, please? So we went into detail here into how you can work out your trading plan. How do you even view the warrants without going through the relevant platform, right? So another very important tool Macquarie has is the warrant search tool, which is how you basically can search for the warrants you're looking for, right? So here, as you can see in the warrant search tool, you're able to search through the underlying. So, earlier I was hearing Martin talk about Farm Fresh. So I've searched up Farm Fresh, and this is what is been included in the slide that you're seeing right now, right? At the same time, you can use our warrant search to browse if you want to call or put warrant, if you want to select the relevant maturity or expiry to map out the investing time frame that you are comfortable with, as well as select the gearing. So remember how gearing works. So based on how confident your trading view is, and where you would want to keep your risk at a tolerable level while targeting to amplify your potential profits. So here, as you can see, as I mentioned, I searched up Farm Fresh warrant, right? And here the warrant that we are able to see is FFBC 29. So the moment the warrant comes out, a lot of key details are quite clear in our warrant search tool itself. You can see that Farm Fresh C29 has an effective gearing of almost 5 times, which means the warrant tends to move almost 5% for every 1% move in Farm Fresh shares. It expires in May 2026, which gives you an idea of how long you're able to hold on to the warrant, and it's trading at an ask price, which is your buying in price of 9 cents. So you can estimate what is the rough amount of capital that you can put in. And you can also see that Farm Fresh C29 is trading 9 cents. It is a fraction of the cost of buying into Farm Fresh shares directly, which as of today would cost you about 2 ringgit 90 cent based on today's closing price. Right. So can we go to the next slide, please? All right. Okay. Oh, very sorry. It seems for some reason the structure of it has run a little bit, but no problem. The last key tool I'd like to highlight today, which will help investors in picking out structured warrants to trade in an attempt to enhance their profitability, would be our new warrant exposure simulator, right? So earlier, we also looked at Sunway and how generally a lot of the depreciation of the ringgit and the upcoming of all the data centers can be bullish on the construction sector as a whole, right? So tying this in the case of our warrant exposure simulator, right? What does it do? It helps investors to estimate your warrant investment amount or the number of warrants needed to replicate an underlying stock exposure with a lower amount of capital, right? So what does that mean? So step one. So what you can do is you can head on our website. You can open our warrant simulator tool, exposure simulator tool, sorry. And then you can select your underlying, which would be, in this case, what I've done is I've selected Sunway. Oops, sorry. Yeah, I've selected Sunway. And then the relative warrant over the underlying would appear, which in this case would be Sunway C53. So step two would be to select the number of shares you wish to own. So I'm not sure if you can see here, but then the number of shares listed here is an odd number of 1,745. And that's because I based it off an initial investment capital in the shares targeted to be at RM 10,000. So third would be the date, which is the date you're looking at the exposure simulator, and fourth would be the underlying current level, which would be auto-populated, but you can also manually input it. And then next would be step 5, which would be the number of days you plan to hold the warrant, or the number of the days the warrant is held. And sometimes you might not be sure how long in general you might be holding on to the warrant. So a good rule of thumb is you may input the number of days in which you believe the share price of Sunway will hit the target price based on your view. And that target price is inputted in step 6. So you can see here, step 5 and 6 is very closely related in this case. And you can also input it in the bottom page of the warrant simulator, which is shown by the chart on the right over here. So once you got all these details in, you can also see there are other details we input on our website here, which includes the warrant's effective gearing. So in this case, Sunway C53 has an effective gearing of 6.9 times, and the initial investment that you would need in the warrant, as well as the number of units you will need to buy to simulate the equivalent amount of investing directly in the shares. All will be shown up here. So as you can see, right, based on the slide, you can see that if I want to simulate how much capital I'll have to buy into Sunway C53 to simulate a 10,000 buy in Sunway shares, will only be about 1,450 ringgit in the warrant itself, compared to initial capital amount of 10,000. All right. So can we just jump to the next slide? So yeah, all these tools that I'm running through, yes, it's quite complicated, and it's all available for investors to use for free, which I strongly recommend you to do so, as it will help with your investment decision making. So if I would have a bit more time, I'd usually run through with a bit of the trading strategies using warrants, but let's keep this short and sweet with only essential information for now. As mentioned, please give us a call if you have any questions. You can just Google Macquarie Warrants Malaysia, hop on our website, and you will be able to find our hotline number. So that'll be it from me, Elki. Hope I've been able to answer your question.
All right. That's very informative details that you are giving out. All right. Thank you very much. Very informative, Norwich. Okay. So yep. I believe with the sufficient knowledge, with enough homework being done, Structural definitely will be able to come up with a tool that help us to amplify our investment returns. Okay, and also on the other hand, also can work as a hedging tools, like what earlier on we were sharing on hedging our long position through put warrants. Okay, yeah. So yep, I think we had we learned a lot today. Even myself, like just now the simulator. I believe they are new, right? Yeah, all this while I've been just using live metrics at the Malaysia Warrants websites. Yeah, Macquarie websites. Yeah. All right. Okay. Yeah.
Yep,
So
it's new.
right now, if you have, yeah. So right now, if you have any of you guys have any questions, do feel free to drop it at the comments, okay, at the chat box, and then me or Martin or Naren, we will try to answer to it. So far, I can see that there's a question from question asking about this by Suen asking about any comment on solar energy related counters like Sumedens, like Percut, like SolarVest, because all these counters they are on the pullback, and also any comments on the silver price on the technical chart, I believe. Okay, so if let's start with renewable energy, so solar energy. Okay, so if we look into, right now we are seeing some pullback on the technical, on the price on technical share for all these renewable energies. But if we are talking about the fundamental wise on the renewable energy sector wise, actually this it should be a ongoing thematic that we should continue to focus on, given that our government's targets is to achieve 70% renewable energy capacity in the national power, and that's huge. Okay, so this target it will keep the industry to focus on renewable energy for coming many years. And starting in this year, we are seeing that the ATAP, okay, Accelerated Transitions Action Program, it will replace the NEM, Net Energy Metering, starting January this year. Okay, and our SS6 is expected to open for tendering, and also we also have additional 300 megawatts under fit-in tariff. So all this will keep all these EPC players, all these solar companies, they busy, and still it should still on our radar to continue monitoring and look for the trading opportunities. Okay, but how about from the technical view, Martin? Do you think that how would
Yeah,
you see on their recent pullback on all, some of
actually,
these
I
counters,
do
maybe
agree.
like
Yes,
SolarVest?
correct. I do agree with you. The fundamental is still intact, like what you said. What has happened is that in the case like SolarVest and Samadan, they in 2026 they've overran, and as a result, a lot of people got in late, and then there was massive distribution at the top. So year to date, if you look at SolarVest and Samadan, it's more than 25% year to date loss. Yeah. And I think if you look back in the history of these solar vests, it's still very early. This is only in early February. So if you are thinking about the long term, there is opportunity to pick up them up. But on technical side, you have to wait for them to build a base first. Yeah, support, then look into the volume, the price, the accumulation, those kind of activities. And then if you follow our algo, the green pentagon will be a time to go back in again. But right now, the trend is still down as such. So be patient. Don't try to buy a falling knife. Wait for it to stabilize first, build a base, and then just wait for the green pentagon to come.
Okay, yeah. So Martin, I've been hearing you talking about green pentagon. So actually, how does this green pentagon works, or what's the idea behind the green pentagon?
Yeah, let me just go to my share some
How how
slides.
how how, how, how
Yeah, I will just share the slides here now. Hang on, I built in. So, okay, my slide is up. So basically, the Pentagon works on volume spread analysis. All right. So what we are trying to do here is to look at price and volume. Right. If you just look purely at price, it can be misleading because a lot of time the big players, they will act before the price. I mean, you look in the case of SolarVest, why at $3.30 you see that market, sort of distribute and started to fall in. Right. Why isn't people buying now? Okay. So we look at the price, the volume, and also the spread of the bar, right? That determines what's happening. So right now you can see the spread for the solar vest is still very wide. So it means there is still continuation of downtrend, right? So that's why we always look at the price spread. Don't just look at the price. Now, why volume matters is because these are high activities, institutional smart monies, they always buy this kind of thing. So we are looking into a low volume. Now, we haven't seen low volume yet for these solar vests since it's been a sell-off. And that's why the volume review those intention. Now, with all this, the algorithm, we put it into a signal. Basically, it's a mathematical formula which has been regulated and looked through by the SC, and they don't change over time. So what we do is to study the price, and when the stock has a gain of momentum, you see that on the green pentagon. That's the up signal. Okay, but of course it doesn't work all the time. And what we try to do also have the exit, which is the sell signal. So the red pentagon is that exit. So all the Macquarie chart that you see on the heat map has those in here. So it works on a mathematical formula that study the price and study the volume. All right. So if you look at in the VSA, how it works on the Macquarie, what we are looking for is smart buying. When you have volume and you have up bar price over period of accumulation on the left-hand side of the chart, that means it's a time to be buying. And the same goes for smart selling, which means at the top, usually at the resistance, you see high volume of selling. Price couldn't go higher in there. And that's usually where we get a lot of distribution. So all this, we make it into what we call the color-coded green to buy, red to sell. So that's why you can see the Macquarie heat map is very beginner-friendly. And we have those filter too. I've talked about the green pentagon screener or filter, or the weekly bullish. So if you want to ride the continued trend, like based on some of the Narine was talking about, like Farm Fresh, I think Suncon and things like that, or 99 Speed Mark. There's another one, right? Go into the weekly bullish, all right? So in short, VSA, volume spread analysis, tells the story. Volumes tells the truth, all right? Don't just follow a price. We always say follow the smart money, because that's where volume is being controlled by the institution. That's in short.
All right, very detailed explanation. Thank you very much, Martin. I think definitely we want to follow the big boys where they put their money in, and we want to be together with them to ride on the trends. Yeah. Okay. I think that's definitely very useful. How it would able to get us to go into the correct transactions. Okay. Noreen. Okay. So there's a questions about the warrants. Okay, it's about the warrant time decay. Okay, so what is actually the time that we should avoid a warrant if we don't plan to hold until the exercise dates? Yeah. So Gasha is asking is if it's a 3-month expiry warrant, is it still okay to hold? Usually, when would you be exiting, or you would start avoiding the warrants?
Okay, so I mean, there's a few factors involved that will affect the time decay, Garcia. So, in general terms, what we always advise is if you have a longer trading view, then you would definitely prefer a longer dated warrant, because with all else equals, longer dated warrant tend to have a lower time decay, right? So earlier I was mentioning about our warrant search tool and also on our live matrix. So actually on our website itself, you can have a look at what our estimated time decay is at each warrant for you to understand, okay, what is the estimated cost as I hold my warrant longer and closer to expiry. But in general terms, how time decay generally works, it is like some form of graph where initially the time decay would be at a gradual rate, and the closer it goes to the expiry date, the more the time decay would ramp up. Correct? So a 3-month expiring warrant is still okay to hold, but as you start to hold towards the expiry date, you will start to notice the time decay getting more and more drastic. So as we always tell all our investors, whenever you trade in warrants, have the time frame set up in mind, choose the warrants beforehand. Don't pick a warrant. If you plan to hold a warrant that is 1 month, don't pick a warrant with 1 month expiry, because if not, the time decay will be generally quite heavy. Right? So I hope that somewhat answers your question, Garcia.
Okay, so basically it depends on our investment horizon, right? Okay.
Mm-hmm.
All right. So
Together with the
I
expiry.
we're
So
gonna
we
take
got to
the
look at two
last.
things at once.
Yeah. Okay. So we're gonna take the last question for tonight, which Suen is asking about. Is silver price hitting new high, affecting the panel cost, and reflected to the price of the related counters? Okay. So for what Suen asking, I believe is it relates to the reasons high price of silver. Okay, so silver price has been for one who have been trading on commodities or have been following on the commodity price in among the commodity traders, silver is actually one commodities that many they have been watching very closely because all this since I think in last year many traders has been discussing about the laggard in the silver price because the gold price has been rallying so much, but silver has been lagging behind. And yet, comparing to gold, silver actually has a lot of commercial usage whereby it is needed in semiconductor, in chips, all these things. Okay, and as we are seeing, there's a lot of chip shortage right now. The heightened demands on chips due to the AI implications. Okay, so I believe right now this is the time whereby silver price is catching up. Okay, and if I'm seeing that fundamentally we need it so much, and why the price is crashing right now. Okay, so one thing is a part of the rising in the silver price at this moment is not only just driven by the fundamental demands, but it also driven partly on the sentiment of the markets from on the FOMO, and also you can see if you look back as the prices rising so quickly, okay, so volatile, the exchange they actually has increased the margin for trading gold, trading silver, and that actually wipe off some of the speculative positions. Okay, and with some losses triggered all this, we are seeing such a volatile movement in the gold and also the silver price. Okay, it's not only just because of the high price and the fundamental aspect, but it involves some of these exchanges, some of the margins positions, some of these sentiments as well. Okay, yep. All right. So I hopefully this answer to you why the what it explained to the recent movement in the silver price. Okay. Yep. All right. Okay. So I believe that would be about all for tonight. Okay. So if you have any other questions, do feel free to like what Narin was sharing. You can always contact Narin through Malaysia Warren's website, or you can always contact us through our WhatsApp or the phone number right over here. Okay. If you like our sections, please do scan this QR code, like and follow us, and in future we hopefully to able to see you more in similar events. Thank you very much, Narin. Thank you very much, Martin, for joining our section today. Okay, great info, and also yep. All right. Thank you very much, and good night, everyone.
Yep. Thanks, everyone. Good night. Thanks, LK. Thanks, Martin. Cheers.
Yes.
Yeah.